Okay, hello. Welcome to Module 52. So we'll do Module 52. And then first we're going to take care of these check your understandings, and there are two of them. They're both kind of about the difference between implicit and explicit cost. So number one gives you this scenario where Karma and Don run a furniture refinishing business, and they run it from their home. Which of these is explicit and which of these is an implicit cost? So, and then it gives us five different ones. So we'll do one, two, three, and then D and E, 4, 5. So the first one says supplies such as paint stripper, varnish, polish, sandpaper, and so on. And that one is going to be an explicit cost because it's money that's like exiting their wallets, right? So one way to think about these is thinking about like, is the money flying away from your wallet? That's kind of a way to think about it. Part B says basement space converted into a workroom. Now that isn't something that they spent the money on, right? They already had that basement space, but it's, maybe we could use it for something else. So it's an implicit cost. It's implied that that's a cost. We're giving something up there, but we didn't explicitly, spend money on it. C, wages paid to a part-time helper. Again, exiting your wallet, right? So it's an explicit cost. D says a van they inherited and use only for transporting furniture. So for this one, there's an implicit cost. It's not explicit because they didn't spend anything on this van, but they could maybe sell it. Maybe they could use it for other things. So we'd say D, an implicit cost. And E says a job at a larger furniture restorer that Karma gave up in order to run the business. Again, this is an implicit cost. It's something that she gave up, but it's not something where the money is flying out of their wallets, right? They don't have to keep paying that, but it's implicit. It's within the cost of doing their current business. Now, number two says, suppose you're in a business earning an accounting profit of $25,000. What's your economic profit if the implicit cost of capital is 2,000 and the opportunity cost of your time is 23? Well, for part A, and it says explain, and so we have this like positive 25,000 in kind of what we say, what did we say? Accounting profit minus the 2,000 in implicit implicit capital, and I'm going to use K for that, and that's kind of a shorthand for capital, and then minus the 23,000 that's the implicit cost of your time. And so that leaves us with 0 economic profit, or we could also say normal, because we know from the lecture that that's considered normal. Part B says, what's your answer to part A tell you about the advisability of devoting your time and capital to this business? And we would say it's fine, but there's no extra benefit. So in other words, if you're currently doing whatever it is you're doing, you should keep doing it. But the moment that maybe your implicit cost of capital or the implicit cost of your time rises, you should stop doing this because you would have a negative economic profit. But in this one, you're just getting 0, and so you're kind of breaking even in an economic sense. In the accounting sense, you're making money, right? But economic sense, you're breaking even. Let's take a look at these multiple choice questions. Multiple choice question number 1, which of the following is an example of an implicit cost of going out for lunch? The amount of the tip you leave? No, that's explicit. The total bill you charge? No, that's explicit. The cost of gas? No, that's explicit. The value of the time you spent eating lunch? So there is going to be that one. So that is D for that one. And we know all of the above is not the right answer because A through C are not right. Number 2, which of the following is an implicit cost of going to college? Tuition? No, because you spent money on that. Books? No, because the money's exiting your wallet, right? Laptop? No, you're exiting the wallet. Lab fees? No, you're exiting the wallet. Foregone salary? Not. You see, you're not paying anything with that one, but you're foregoing something. So it's an implicit cost. So that one is E. Number 3, which of the following is the best definition of accounting profit? Accounting profit equals TR minus depreciation and both just the explicit cost, right? Because accountants, they only care about the explicit. They aren't going to care about the implicit. The economists are going to say, you got to think about the implicit cost of doing things. But the accountants only care about the explicit cost, so we would say A for that one. Number 4, Which of the following is considered when calculating economic profit, but not accounting profit? And then that's the one where we're looking for implicit. Remember, economic people, we think about implicit costs, but accountants, they don't care about that. So implicit cost would be the correct answer, A. And number 5, last but not least, you sell t-shirts at your football games. Each shirt costs 5 to make, sells for 10. Each game lasts 2 hours. You sell 100 shirts a game. You'd always be earning 8 an hour, which you're following is correct. You're accounting profit from selling shirts. Okay, so accounting profit in this one, first we got to figure out our total revenue. So we sell 100 shirts at $10 per. So 100 times $10. So we have a positive 1,000 in total revenue. And now we're going to subtract our explicit cost only. The explicit cost is the 5 times the 100. And so that's negative 500 in explicit cost. And so for us, we are netting a positive 500 in accounting profit. The accounting profit is 500. So that's going to leave us with B, C, or D, right? B, C, or D. And then what's our economic profit? Well, we could always be earning $8 an hour at the other job. So for us, we have to think about, well, it's 2 hours. And so we subtract, right? We subtract 2 times $8. So 9 is 16 because that's the implicit cost. And so that leaves us with positive 484 economic profit. And so where is that answer? That is C. Moving on. Okay, now let's take a look at the second tackle the test free response. Free response number 2. Sunny owns and operates a snow cone stand. Use the data to answer the question. Sunny snow cones, price, number sold, explicit, depreciation, implicit. Calculate the snow cone stand's total revenue for January. Okay, so total revenue is the price times the quantity. P times Q equals TR. So what's our P is $2 times 2,000 snow cones. So we have $4,000 in total revenue. Now, B is what's our accounting profit. So we're just going to subtract the depreciation and the explicit costs. So explicit cost, it gives us is 400, depreciation is 100, so minus 500. So we have 4,000, or is that, yeah, 4,000 because it's the TR minus 500 gives us 3,500. So this is the explicit cost plus depreciation. And C says, what additional information would we need in order to determine whether she should continue operating the snow cone stand? Well, we need to know the implicit costs of everything, right? So they give us implicit cost of capital, but Sunny's doing some time here. So we need to know the implicit cost of Sunny's time, right? Maybe Sunny could be working as a lawyer charging $500 billable hour, right? Sunny's time. And so that's, or we could say Sunny's labor, because that's the real resource we're talking about here, right? And then D says, explain how Sunny would determine whether or not to continue on the basis of these numbers. Well, if the economic profit, profit is greater than or equal to 0, she should continue. She should continue. And so we'd say if 3,500 minus the 200, which is the implicit cost of capital, and then minus whatever her implicit cost of her labor is, if that is greater than or equal to 0. And so we would kind of need to know what her implicit cost of labor is to solve that. Okay, so hopefully this helped you. I'll see you next time.